we all know that we should be purchasing gold, silver, bullets, ammo, weaponry. Do you feel that these things should be the investment into the stock market? Is that really something that we should be even thinking about doing?
The only thing that I can recommend in the stock market is gold and silver shares, and otherwise gold and silver coins. There are people who have great wealth out there that I run into, and they will buy along with gold and silver related assets, Canadian and Swiss franc bonds, treasuries, AAA rated paper. And the reason why is they just don't want to put $5 or $10 or $20 million all in the same place, and I can't blame them. And so those bonds are neutral, so to speak. And they'll probably gain in value because the dollar will go down over the next few years or more against those two currencies. So what you would do is get a capital gain because they only pay about 1.5%, like most instruments today. But generally speaking, get out of the market. It's going to be very, very difficult.
I have an IM here. If we can get this transposed, an IM here from Pensacola, Florida. Mr. Chapman, do you feel that the stock market is being driven up and they're going to crash it in the near future?
Well, I don't know what the timing is, but yes, they are running it up. We first had at 6,600 in the Dow short covering, and that took the market back up to 8,500. Short covering is when you bet the stocks are going to go down, and they do, and you buy them back to close out your position. And I think that was instrumental in the move to 8,500. But the move to 10,200 was influenced by the manipulation of the United States government in the market, as well as the tremendous amount of money that was lent by the Federal Reserve and the U.S. government to banking, Wall Street, and also insurance companies, and even corporations like GM and Chrysler, AIG. And that money, in part, is being used to run up the market. And it doesn't take much, because what they do is they take money and borrow money. And when they do that, they run the market up. And that's what's been going on, so it's phony baloney.
Do you feel it would be within the next year or two? Will it be a year or so out?
I think it'll be within the next year. I don't know how deep and how quickly. There's two things on the horizon here for next year. One of them is called the FASB. And what it is, it's an international accounting organization, and they make the rules for accounting for companies throughout the world. And they have said that at the beginning of the year, there will be no more mark to model. You will have to mark your accounts, your balance sheet, to market. Now, what does that mean? Marking to market is reality. You own buildings, you get compensating figures from buildings that have been sold in that area for the last 6 months or the last year, whatever. And then you can put a value on that building. That's marking to market. If you own $1 million worth of bonds in Hewlett-Packard, they trade. So at the end of the year, you can mark in that they were all trading at par. So you have a market. So you're marking to market. You're marking to reality. Now, if you go and you use mark to model, you can make the asset be whatever you want it to be, which means all the books from all these corporations are bogus. And the FASB is saying, not only do you have to market to market, you have to take all of that garbage that you have, and you have to move it from off balance sheet onto balance sheet. And that's going to take a lot of companies under. And then you have Basel 2 and 3 as promulgated by the Bank for International Settlements, which is the banker's bank. And they're saying relatively the same thing. But they're more interested in banks. And they're telling the banks, look, you have to have a current ratio of 8 or 10 to 1. And what that means is, for every dollar you have in deposit, you should not be lending out any more than $8 to $10. As you see under the fractional banking system, banks create money out of thin air. Most people don't know that, but they do. Right now, the average bank is 40 times their asset base. And the Bank for International Settlements says, look, you all belong to our organization. You've got to bring it down. So between the FASB and Basel II and III from the Bank for International Settlements, what's going to happen is going to be a disaster. Now, I don't know whether they're going to follow through with it or not, but if they do, the market's going to come tumbling down big time.
On review today, Mr. Allen, one of the topics was an article about why Wall Street isn't Main Street anymore. If you have any input on is half Wall Street in the United States versus the other markets around the world?
Well, all markets are in part corrupt, but the market in the United States today takes the cake. It's a criminal enterprise. I mean, they are front-running trades, which is illegal. They call it flash trading. They're allowing naked shorts, which is illegal. This is the SEC, is allowing, sanctioning illegal activity in the market. Well, what do you expect you're going to get from Goldman Sachs and J.P. Morgan Chase? You're going to not only get that illegal activity, you're going to get a lot more. Inside information is rife and always has been, always will be. You cannot stop it. But it's used every day to make money. And the final analysis, it's the public that gets screwed.
Mr. Chairman, the United States is looking to take $1.4 trillion from the TARP funds that are going unused and pay off the deficit. Is that nothing but a borrow from Peter to pay Paul with Peter's money?
Yes, that's exactly what it is. It's sort of the three-card Monte game. And the figure's probably about 200 to 250 billion. Not 1.4 trillion. But it's another shell game, and it's to keep the public shut up.
Follows up with a question. What is your input about the world running out? That's something to drive the prices up.
I couldn't get that. Could you please repeat it?
The word is out that the world gold supply is running out. Is there a problem with gold supply on the gold supply? Is it actually running out? Is it just some fear tactic that's driving the cost of gold upward?
Now, first of all, the statement is true. Second of all, there has been 150 to 200 ton per year shortfall in gold production versus consumption. So this has been going on for several years. So it's nothing new. If you were inside that business the way I am, you'd know that. And that's why I can answer it. Now, what's even worse is that very few new gold and silver mines are coming on stream. That means that less and less gold and silver will be coming on market. That means that the prices have to go up unless everybody who had investment gold and silver sold it all. And people who have investment gold and silver, which are coins and bullion and shares, they know what I know. They know what you saw, which was in the news. And so they're not going to sell. because they know prices are going higher. And so it's a true statement, and it's just fundamentals. It's pretty simple.